There could be some serious changes that could affect you that nobody is talking about. Stay tuned in this episode of Prime Properties TV and we'll be talking exactly what that is. Good day, Toronto. Welcome to another episode of Prime Property TV. We're so glad you could join us for this episode. We're going to be talking about the last financial policy that has been changed that nobody is talking about. This is a major change that can affect you, the end consumer, that nobody is talking about. Now, before we get started, I want you guys to understand what mortgage insurance, default insurance is. And if you don't remember, you can click on the link up here where I'm talking about it. So this insurance actually covers the lenders, these are your banks, against their revenue, meaning that in case anyone defaults, they still make money because they're covered for that. Now, I want you guys to imagine this. If it's harder to get this insurance policy, that means the banks who are lending you the money have to put this money aside in case people default. Now, imagine this. If you have to put money aside that you can't lend out, that means less money to lend out. If you have less money to lend out, it means less money that the banks can make. If there's less money that banks can make, in order to make that money, they have to increase mortgage rates. Boom! Let that sink in for a bit. This is going to be a big thing if it actually gets implemented. Now, before anyone freaks out, I want you to put it in perspective. It's like if you have an investment property, you have to put 20% down, okay? If you have to set aside another 20% if the bank's like, just in case you can't pay it, that means then for you to make money off your rentals, you have to increase your rental rates because your money is held somewhere where you can't use. It's crazy if this gets implemented. But again, remember, this is all still in talks. And frankly, if it does happen, big shifts are coming and I'll keep you guys updated if that happens, okay? Now, we've talked a lot about financial policies and, some of you guys may be freaking out a little bit, but I want to just go back a little bit to show you that, this is not the first time the Canadian government has been kind of keeping their hand down on the real estate market. I want to go back a little example since 2008 to show you some of the changes that have happened, okay? In 2008, the amortization year, which means the duration of the mortgage you're allowed, went from 40 years to 35 years, which means higher monthly payments. In 2010, refinancing your home went from 95% to 90%, which means you can take out less money of your home. Then in 2010, the same year, they implemented the mortgage insurance for people who had less than 20% down payment, which means higher mortgage payments for people who have less than, that need the mortgage insurance. Then in 2011, they changed the amortization year from 35 to 30, and again, higher monthly payments. Then in 2011, they changed the 90% refinancing to 85, which means taking less money out of your house. Then in 2012, they changed the amortization from 30 years to 25 years, higher monthly payments. Then in 2012, they changed it from 85% to 80% for taking money out of your house, which means less money you can borrow from your house. And then in 2012, they implemented a stress test for people who had 5% or less, which meant it was harder to buy a property. Then in 2015, they increased the minimum down payment for any house over $500,000, which means harder to buy. And in this year, 2016, they had a mandatory stress test for anyone who needed mortgage insurance in order to buy anything, which means it was harder to buy because it was harder to borrow. See the pattern? Moral of the story, the Canadian government is concerned about real estate prices, and which always leads me to people asking me this question. Are we in a bubble? Are we going to crash? Stay tuned. In the next episode of Prime Properties TV, I'll be answering that exact same question. Thank you guys for watching, and if you learned anything from this video or simply just enjoyed watching it, make sure you click on the subscribe button to PrimePropertiesTO. If you have any questions or any comments, you can leave them in the comment section or reach out to me directly. Our team will do our best to answer them for you. And remember, make sure you share this with family and friends because an educated consumer is the best consumer. I'll see you next time, Toronto.